Hello and welcome to this video. Based on the request of a subscriber, we are going to do a question from paper 3, variant 32, May-June 2018, section A, question 2, which is based on company accounts. So let's start. In the question, we have trial balance for NPLC for the year ended 31st December 2017. The information given is about land and building, provision for depreciation for land and building, equipments, provision for depreciation for equipments, revenue, purchases, administrative expenses, distribution cost, financial charges, inventory, which is the opening inventory, trade receivable, trade payable, cash and cash equivalent, ordinary share capital, share premium, debenture and retained earnings. Further following information is also available. First adjustment, revenue includes a deposit of $6,000 from a customer for the goods to be delivered in March 2018. Second, total inventory at 31st December 2017 cost $265,000. Of this, the goods costing $24,600 had a net realizable value of $18,800. Third, land and building were acquired in 2008. On 1st January 2017, they were revalued at $720,000, of which 2/3 was allocated to land and 1/3 to building. NPLC had not recorded this revaluation. Fourth, during the year, a new photocopier was purchased for $80,000. The purchase consideration was settled by an exchange for a fully depreciated old photocopier with a trade-in value of $10,000. The old photocopier has been purchased in 2011 for $40,000. The balance of the purchase has been paid by check. NPLC had recorded only the bank payment transaction. There is no other purchases or sales of current assets during the year. The fifth point states depreciation is to be charged as follows: land and building over the useful life of 25 years, equipments 25% per annum on cost. A full year's depreciation is charged in the year of purchase and none in the year of disposal. All depreciation charges is to be included in administrative expenses. Sixth, an interim dividend of $30,000 was paid on 1st October 2017 and included in administrative expenses. Seventh, interest for 3 months on the debenture has not been recorded. Then, in the A bit of the question, we are asked to prepare the income statement for the year ended 31st December 2017. So, let's do all the adjustments and then we will make the income statement for the year ended 31st December 2017. Do the working notes for all the adjustments. First, revenue included a deposit of $6,000 from a customer for the goods to be delivered in March 2018. As we are making the final account for the year ended 31st December 2017, this value, which has to be included in March 2018, will not be a part of our revenue. Hence, we will deduct this value 6,000 to get the total revenue for the year ended 31st December 2017. We do this adjustment based on the prudence concept and realization concept. Prudence concept states that the profit should not be recorded until it is earned, and realization concept states that the goods should not be considered as realized until the title is transferred. Hence, the title is not transferred in 2017 as well as this revenue is not earned in 2017. So, we are not going to record this, so we are going to subtract this value to get the total revenue. Next, the second adjustment states that the total inventory at 31st December 2017, which will be our closing inventory, cost to be $265,000. Of this, the cost of $24,600 had a net realizable value of $18,800. So, based on IAS 2, the inventories should be valued at the lower of cost and net realizable value. Here the value, net realizable value is 18,800, which is lower than the cost of the inventory. Hence we will get the difference and subtract it to value the inventory at net realizable value. And once we subtract it, we get the closing inventory for the year as $259,200. Adjustment states that land and building were acquired in 2008. On 1st January 2017, they were revalued at $720,000, of which 2/3 was allocated to land and 1/3 to building. NPLC had not recorded this revaluation. So if you see this revaluation, the year of revaluation is 2017 and the year of purchase was 2008. So this means that revaluation has been done after 9 years, and it is stated that 2/3 was allocated to land and 1/3 to building. So we are going to allocate 2/3 to land and 1/3 to building. So in the fourth transaction, it is stated that during the year a new photocopier was purchased for $80,000. So this will increase our fixed assets. Then the purchase consideration was settled by an exchange for a fully depreciated. That means the asset value of this old copier should be 0. That is, it is fully depreciated. But we got the value as trade-in of $10,000. So this is the profit on the sales of the photocopier. The photocopier had been purchased in 2011 for $40,000, and the balance of purchase has been paid by check. That means the additional, that is 10,000 plus 40,000, which is 50,000, and the leftover 30,000 was paid by check. NPLC had recorded only the bank payment of the transaction. There was no other purchase or sales of the non-current assets during the year. So this is what is stated in the fourth adjustment. The fifth adjustment states that depreciation is to be charged as follows: land and building over the useful life of 25 years, equipment 25% per annum on cost. A full year's depreciation is to be charged on land on the year of purchase and none in the year of disposal. All depreciation charges is to be included in administrative expenses. So let's do the working for depreciation. Land and building, if we remember it from the third working note, we know that it was revalued after 9 years. That is, we purchased the land and building in 2008 and revalued it in 2017. So that will be the number of years will be 9 years. And if here it is stated that the useful life is 25 years. So the remaining useful life will be 25 minus 9, which will be 16 years. Furthermore, it was stated that 1/3 was for building and 2/3 for land. Land is appreciated and not depreciated, so hence we are going to depreciate only the building, which has the revalued value of $240,000. So if we take this $240,000, which will be the cost of building, divided by the remaining useful life, that is 16 years, we get the value of depreciation as $15,000 for building. Next, for equipments, the cost which is given is $278,000. To this, we are going to add the profit which we made when we sold the old photocopier machine, that was $10,000. Why we are going to add this? That means the profit which we got when we sold the photocopier, this was the profit because we have over depreciated the assets and we have completely written off the value and thought the value of the old photocopier was just zero. So we have over depreciated this, and because of which the total cost of the equipments have been understated. Now when we add this 10,000 back to this, we are getting the actual value of the equipment. From this we are going to subtract the value of the old photocopier which we have disposed to get the cost of equipments. Once we get the cost of equipments, we will multiply it with 25% which is given in this adjustment, and we will get the value of depreciation for equipment as $62,000. So now we are going to calculate the total administrative expense. The amount of administrative expenses which was given in the trial balance was $674,000. To this we are going to add the depreciation which we have calculated, which is $77,000, and from this we are going to subtract the profit on disposal, that is $10,000. The profit on disposal of equipment, again I am going to state that this profit means that the assets have been over depreciated. So to get the right value of depreciation, we are going to subtract this $10,000. There is another way of dealing with the profit on the disposal, that is we add this to the revenue. But as all the adjustment related to depreciation is to be added up and subtracted from administrative expense, in this particular question we are going to subtract it here and we are not going to add it back to the revenue. So we get the total value of administrative expense after this as $741,000. In the sixth adjustment, it is given that the interim dividend of $30,000 was paid on 1st October 2017 and was included in administrative expense. Dividend will be a part of the statement of change in equity for the year and not a part of administrative expense, and this was wrongly done here. So we are going to take the value which we got here, that is from the fifth adjustment, $741,000 for administrative expense, and from this we are going to subtract the interim dividend $30,000 and we get the total value for administrative expense as $711,000. In the seventh adjustment, it is stated that interest for 3 months on debenture has not been recorded. In the trial balance, it was stated that the debentures are 6% debentures and the value of debentures was $200,000. So we'll take $200,000, 6 by 100, that is the interest on debenture, and we have not recorded for 3 months, so it will be 3 by 12. We get the value of interest for 3 months as $3,000, and in the trial balance it was stated that the financial expenses was $9,000. To this we are going to add the unrecorded interest, that is $3,000, and we get the total financial expense for the year ended 31st December 2017 as $12,000. Now we are done with the adjustments. We will proceed and make the income statement. In the income statement, we are going to take the revenue which we got from the first working note, and from this we are going to subtract the cost of sales. The cost of sales will be the opening inventory plus the purchases minus the closing inventory value which we got from the second working notes, and once we subtract this value from the revenue, we get the gross profit, and from gross profit we are going to subtract the other operating expenses, that is distribution cost which was given the trial balance, and administrative expense which we calculated in the sixth working notes. So once we subtract that, we get the profit from operation as $37,200, and from this we are going to subtract the financial charges which we calculated in the from the 7th working notes, which is $12,000, and once we do that, we get the profit for the year as $25,200, which will complete our income statement. In the part B of the question, we are asked to calculate the revaluation reserve at 1st January 2017. So the revalued value of land and building, which was stated in the third adjustment, was $7,20,000. The original value which was given in the trial balance was $600,000. So the amount which have been changed is $120,000. And even there was accumulated depreciation which was mentioned in the trial balance for land and building, which was $72,000. When we add both of this, we get $192,000, which will be the revalued reserve at 1st January 2017. And the next further information is given. There was a water leak in the company's printing room in January 2018. This destroyed the new photocopier, which was not insured. C bit states that how this should be treated in both 2017 as well as 2018 financial statements. As in 2017, the year was already completed because this happened in January of 2018. Hence, in 2017 financial statement, we will write it just as a note based on IAS 10. And in 2018, as this occurred during the year of 2018, hence we are going to write it as the decrease. We are going to mention in the financial statement and write it off as the decreased value of asset. In the D bit of the question, we are asked to mention what is meant by impairment loss in respect to non-current assets. An impairment loss is the amount by which the carrying amount of an asset exceeds its recoverable value. Carrying amount is the net book value which we mention in our books of accounts, and recovery amount is the amount at which the assets can be sold in the open market. If the value at which we can sell our assets is less than what we have mentioned in our book of accounts, then we need to adjust it with the help of impairment loss. And this all is stated in Accounting Standard 28, which states that the business assets must be tested for impairment when a situation occurs that causes the asset to lose its value. And furthermore, certain intangible assets such as goodwill are tested for impairment on annual basis. This is the last bit of our question, and with this we end our question. Thanks for watching this video, and I wish you a great life.